My name is Michael Guyette, publisher of the Lead Lag Report. Joining me for the hour is Tuur Demeester. Tuur, introduce yourself to the audience here. Who are you? What's your background? How'd you get interested, involved in Bitcoin, and what are you doing currently?
Sure. I'm an investment analyst and investor. I started off as a writer, author of a financial newsletter. And then early on, I discovered Bitcoin and I started reporting on it for my audience. This is back in 2011, 12. And then since 2013 or so, I really started going full time in the Bitcoin space. I've made some startup investments. And over the years, I've published a number of investment focused reports, talking about the price cycle in Bitcoin mainly and all the global macro factors that come into play. So that's how most people know me.
Talk about in those earlier days in 2011 and 2012. Did you approach those writings from a place of curiosity, skepticism, or did it kind of did you naturally gravitate toward the story to begin with?
Yeah, I mean, I was skeptical in the beginning. 2011, I remember I was especially wondering, like, how can you possibly actually create scarcity in a digital context? Like, that really took some time and conversations with very generous engineers who just, explained to me the Bitcoin protocol. And so then gradually it turned into enthusiasm. And, I came from the perspective that the banking system was just inherently problematic because of the fractional reserve nature of things. I came from the perspective that we were going to see, I was living in Europe at the time, like increased inflation and eventually the euro would disappear. I still believe that. So that from that point of view, I was trying to find like what assets are still good to be invested in, if you're going into something like a depression or an inflationary depression. And it's been going on, 12 years that I've had that thesis. And so, early on, gold was my focus. And then gradually I just added Bitcoin to that basket.
And did you have it as pretty much the bulk, if not all of your portfolio, or was it balanced against other types of investments?
Oh, I mean, the way it usually goes with Bitcoin is that you just start with a moderate investment and then because you don't rebalance, it just crowds out everything else because of how much it outperforms. It's, if you average it out, I think it's about 200% gains per year, over that 10-year lifespan. So that's enough to just push like a cuckoo's bird, like to push everything else out of the nest, relatively speaking then.
Yeah, and I'm sure you've seen the studies or backtests that show that rebalancing actually gets you pretty good returns also, right? Because the volatile nature of Bitcoin lends itself to the natural aspect of buying low, selling high, which is really what rebalancing is against other assets. But I think that kind of lends into a discussion around risk management, right? So no disagreements. Obviously, it's done very well and it becomes a bigger and bigger portion of the portfolio, but then so does the risk, obviously. Now, you can argue that doesn't matter because, you're already so ahead. But when you saw your own portfolio holdings going higher and higher, did you ever consider just taking some chips off the table, or is it just sort of a buy and don't touch it forever?
Well, yeah, for me, the way I've compensated for the increase in perceived risk, because if you're kind of like an agnostic macro investor, you just want to be diversified across the board because you want to compensate for your lack of knowledge in particular spaces, and then you might be caught off guard. But so my strategy and that, of a lot of Bitcoiners by now is to compensate for that by just studying harder and just really, because I guess my thesis, which admittedly could be wrong, is some kind of private digital currency is going to be dominating for the next decades. Like, it just really makes sense to me that we have TCP/IP, we have like several protocols that really set the foundation for the internet and the digital world that we live in. And that it makes sense that we would also have a monetary protocol that joins them. Because to me, the fiat experiment is really, it's already showing that it's a failed experiment. Like, centralized parties, you cannot be trusted with managing the money supply. You need some kind of objective way to do that in the way that mimics the gold standards. So then to me, it's more of a question of, okay, which one is going to win out? And that's why I invested so much time year and after year to try and study the space and see, like, is Bitcoin really going to be the one? Like, am I suffering from survivor's bias? What about all these other proposals? What about the supposed flaws in Bitcoin? Just to really go over it over and over. And so then you gradually get more comfortable with having a higher concentration of this particular, just like, in the 1800s, people didn't have to think about having a balanced quote unquote portfolio. They just had money by and large. They had a life insurance policy. They might have some deposits, and all of that was gold. So people were, from our 21st century perspective, like they were maddeningly overexposed to gold. But from their point of view, it's like, no, gold's been money for 6,000 years and I'm just saving. That's all I'm doing. So that's kind of the point of view of people that have been in the Bitcoin space for a long time. I don't want to speak for other people, but at least for me, it's like, yeah, I think this is just money. And the reason why it's so volatile is just our reaction to it, or the market's reaction to it, but that's not an inherent feature of the technology.
That point about centralized parties cannot be trusted is unequivocally true, but centralized parties also can have influence, which result, I'd argue, in an unintended path for how certain things can play out. I'm curious to hear your thoughts on this narrative that's constantly out there around it's a good thing for Bitcoin to see institutions come into the space in terms of either ETFs or the types of products. And the reason I think that's important to talk through is institutions like to put things in boxes, right? They like to categorize.
Yeah.
They like to characterize, how they think about investing, right? So, if you get to a point where Bitcoin gets dominated by institutional players and then they categorize it as just another NASDAQ play, then they have an influence on the correlation of Bitcoin, which I'd argue you actually don't want.
Sure. Yeah. I mean, yeah, for sure. Like, whatever story people project on Bitcoin will, if those people manage very sizable assets, then that's going to influence the price. I agree.
But I guess the question is that a good thing or a bad thing?
I think it just is part of the process. Like, imagine that somebody invented gold 20 years ago or 15 years ago, like the world would grapple with, like, how do we deal with this? How do we price this? Is gold, like, is it an industrial asset? Do we use it only in, or is it like an ornamental asset? Is it truly, and so the price would be all over the place. And one analogy I've used over the years is how the market was valuing petroleum in the early days. Like, it was first distilled, derivatives from it were distilled back in the 1860s. And so it was a huge question of, like, how useful is this? Does it depend where the oil comes out of the ground, et cetera, et cetera? And then especially, how do you value the oil companies as well? The oil price was extremely volatile in the first few decades. So yeah, to me, it's just part of the process. Like, it's not a good or a bad thing. If anything, it just shows that the world is thinking. The world is thinking about Bitcoin. And, and I believe in the first place, it's going to be a means of saving. It's going to be a way to transport, today's wealth over time into the future. And of course, geographically as well. It's the best in the world at that. If you want to send Bitcoin, you could send it from North Korea or send it to Zimbabwe. It doesn't matter. Like, that's how powerful it is. But because of the 21 million limit and all the safety guards around that, it's also a fantastic way to preserve scarcity. And that's how you transport value into the future. So to me, that's the main story. It's like Bitcoin, store of value, has the promise to also become a transactional money, but we're not there yet. And then, of course, Silicon Valley is going to project all kinds of things onto it. And if you're like a nation state and you have a lot of energy production, like, maybe then you look at it more as a convenient way to put stranded energy to use. And so I think it's totally fine for people to have different stories, but I don't think it's a fad. I think we're beyond that. Early on, people also thought it was like a pyramid scheme. I think we're beyond that as well. So yeah, I mean, it's kind of like, if people can't understand the fundamental value proposition of Bitcoin, they will be going in with very weak hands. Like, they'll buy some, and then as soon as there's a 20%, 30% correction or more, they'll just, leave the market because they never, understood the fundamental value proposition.
Is it fair to say that 2021 was the sort of year of not viewing Bitcoin as means of saving, but more as a means of speculation, and not just Bitcoin, but really other cryptocurrencies too, right? Given the way the space acted, and that maybe now we're just because volatility is quite a bit lower, that we're maybe transitioning to a new way to think about Bitcoin.
I agree 100%. 2021 to me was just a year of kind of insane exuberance in so many ways. Like, the floodgates had been open in terms of how much stimulus was going into the economy, how much government spending was happening. And so people were fooled in believing that all of a sudden they had a lot of financial means, even though what really was happening is just a reshuffling of purchasing power in the economy. And so people started, doing the YOLO and buying AMC stock and going crazy about just pictures on the internet, which was the NFT craze. And believing in all these tokens, which it's almost like an equivalent of like the Beanie Baby story, but then on steroids. So Bitcoin got swept up in that. I think, a lot of the people that bought Bitcoin were doing it from that kind of like, this whole crypto space is exploding and, it's a new world out there and you just got to have some Bitcoin just because. So I think that also is why there was, such a prolonged bear market, is that, a lot of money was voting on Bitcoin from the wrong point of view and basically has had to sell. And what we're seeing now is that I believe the bottom is already put in by smart money who is there from a value perspective and who are just scooping up cheap Bitcoin. And those are the so-called diamond hands, like people that are really intending to stay and hold Bitcoin for the next 5, 10, 30 years.
Yeah, and it's important to know that I'm sure there's been a lot of drying up on the VC private equity space, but there's still quite a bit of institutional demand that goes to startups trying to take advantage of this.
Yeah, I think a lot of the institutional money though is still kind of confused. I mean, we are seeing some good signs though that there's now we're seeing more for the first time actually several coin-focused VC funds, and so they of course go around to institutions and pitch this idea that hey, what if Bitcoin is TCP/IP, or what if Bitcoin is World Wide Web, and everything is going to be built on it. That is the thesis, and that's why they just stick with Bitcoin only startups to invest in. Whereas before, like if you look at a Coinbase or some of the other more known companies, they would just have this like spray and pray approach of like, oh, we're just going to serve the whole quote unquote crypto space, which meant that they really lost a lot of focus, and which also meant that they would cater to gamblers, basically, to people who didn't really look at Bitcoin as a store of value. So to me, those are very different philosophies. And it's encouraging to see that there is at least some money. Like historically, there was actually a fund here in Austin that put out research. And what they showed was, I believe, more than 99%, maybe it was 98%, it was just a staggering amount of all the VC money that went into the crypto space went to crypto startups, and only 2% of the money went to actual Bitcoin startups, which is, crazy from even a market cap point of view, because Bitcoin's market cap, I would say, if you adjust it for liquidity, is at least half of everything else, 50% of the whole pie. So yeah, basically we're seeing institutions play catch up now.
Yeah, and presumably the confusion by institutions gets resolved whenever Bitcoin is properly classified, right, by regulators. I haven't been tracking the Ripple stuff other than just some random headlines, but where are we from your perspective on regulators properly defining Bitcoin and broadly other cryptocurrencies?
Well, I think so far, at least in the US, I think they're absolutely correct to call Bitcoin a commodity. That's what it is. That's how Satoshi described it. There is nobody in control of the protocol. There is no profit incentive because there is no company in charge. And people just buy it because they believe in it and trade in it, just like you would with any commodity. And as far as the other, tokens, I think most of them probably are unregistered securities. And in a way, this is kind of the only way to really find out, because they've been claiming, and I don't mean everyone, but a lot of those coins, tokens like Ripple and Ethereum, they've been claiming like, no, we're also commodities. But that implies that nobody's in control. And so if we would see a crackdown where the SEC calls bluff or some judge who's saying, there's a scam that happened on your platform. Now you got to, roll back the chain and basically censor transactions. Well, then we'll see in their response, like they actually do censor the transactions in response to a government edict. Then that's proof that it's actually a centralized platform and much more likely to be a security. So yeah, this is kind of another part of the market figuring out what is going on here. Just like, with the .com bubble, there was a decade of lawsuits that followed the bubble where the market was, and I'm not saying the market was always right, both in pricing and in the judgments of judges, but at least it's a process where you're trying to figure out what's going on. And the Enron guys, they need to get some punishment, and the equivalents of Google and Amazon, they need to get their time to shine. So I do think there's quite a bit of parallels with those two periods. But of course, maybe let me just add this. The challenge as well is that if you acknowledge Bitcoin's basic value proposition, right, which is like a digital store of value, absolute scarcity, value that you can transport over time and space, well, that means it's a direct challenger to the dollar, right? And so that is challenging for institutions to validate. It's like if they validate that proposition, well, it can be seen as being not patriotic or being, just overly controversial and rebellious, or taking a political stance where, of course, they want to just be market players. So I think that is something that's not often talked about, but that's a genuine challenge. And I do think Wall Street just loves money, and they will find narratives to excuse these investments. I think they will find ways to get invested regardless of whether it's controversial or not. But it could, explain some of the hesitation and some of the more confused messaging around this.
What I find interesting about the behavior this year is you had that spike in March, right? Which when the regional bank crisis was playing out, I myself said publicly, it's almost like a wet dream for Bitcoin maxis, right? Because you have counterparty risk now in the headlines, Bitcoin counters because of the lack of counterparty risk. But then, they, at least for a moment, saved the system and everyone forgot about the regional bank crisis. Now maybe starting to come back into the mindset here. How important is the ongoing banking system failures to Bitcoin here now, right? I myself believe that we're probably on the edge of a credit event, if not already in one. Credit event would pull into question counterparty risk anyway. And that's one of the reasons I keep saying I think Bitcoin will diverge this time compared to other high volatility risk off periods. But how do you think about the interaction of Bitcoin demand to, banking system trust, given what still seems like some real credit issues?
Yeah, just to make sure I understand, when you say you think this time Bitcoin will diverge, in what sense do you mean?
Meaning it will not correlate to the Nasdaq.
Right. It'll be more like a safe haven asset. Is that what you think?
Yeah, more. I suspect more of as a counter. It doesn't necessarily have to go up, but even hold or down less would be enough. I mean, that would make it more like gold in risk off periods.
Yeah, I hear you. Yeah, I mean, I agree with that. Generally, that's part of why I'm so bullish, is that not only is this just better technology, but it comes in a period where the financial system is shaking in its foundations. And Bitcoin has very clearly shown that it doesn't correlate with a lot, but it actually does, interestingly, correlate with increases in the money supply. Like, it doesn't respond to CPI inflation, which is kind of the after effects of when you push a lot of new money in the system. But it does really respond to increases in the money supply. So, and that to me is kind of shows that there's actual smart money behind Bitcoin, because the money understands that, when there is a big wave of bailouts, that will down the road decline the value of the dollar, for example. But so, yeah, just to speak to this particular crisis, it's so weird that the bailouts that we're seeing, even adjusted for inflation, are on par or even bigger than what we saw in 2008. And yet nobody seems to really pay attention. Like, I was around, and I'm sure you were too, back in 2008. And there was just, people were shocked at the amount and the amount of the bailout, and just how unprecedented that was, but now it's just taken for granted. Like, oh yeah, like they're going to bail out the banks. Like, sure, maybe some shareholders will lose some value, but at least the depositors will all get bailed out. And now we're seeing players like, what is it now? Schwab seems to be in problems, and definitely the regional stuff is not over at all, because they seem to have a lot of exposure to mortgages, and then that's a huge problematic sector as well. So I agree. Like there's a credit. I mean, I would say, yeah, credit. Where isn't there going to be a credit event? Like if you look at just interest rates on government debt, like that is going bananas. U.S. government is now going to pay close to $1 trillion just on the interest on their own debt. It's just insane. Especially if you start expressing that as percentage of tax revenues, or a country like Japan, or, I mean, you name it, there's just credit risk everywhere, which to me means the only answer, it's just a matter of when, is going to be opening the money faucets big time. Oh, and that's what happened in, the late 1700s in France, where they would just respond to every crisis with more money printed. And just like with a heroin addict, the higher the doses, the lower the response gets, because the system just anticipates the next shots. And so eventually what happens is the money just really starts going down the drain. And so to me, in a way, if you want to look at what the future is, like we got to look at places like Argentina and Turkey and Brazil. I think Brazil is maybe not in that bad shape right now, but at least, high inflation is down the road to be expected. And so, I mean, I like gold. I want to like gold, but I struggle a bit with how geographically constraining it is. Like it's very expensive to move gold across borders. It's very expensive to store and audit gold. If you buy a bar of gold, or most companies, larger companies, they'll just automatically melt it down just to make sure there's no tungsten in it. So that's all really expensive, and the coin just bypasses that. So to me, relatively speaking, yeah, I find it's like not scary at all to talk about $200,000 Bitcoin, $400,000 Bitcoin in the future, even corrected for inflation.
So you put out a research report, how to position for the Bitcoin boom. And I'm going to assume the spoiler alert is to buy Bitcoin itself. but it is curious because, it's opposite what I think about, right? How do you position Bitcoin? Buy Bitcoin. But I'm sure there's a lot more to it than that. So maybe just kind of lay out some of the things that you put together in that piece.
Yeah. So I started writing it at like $18,000 Bitcoin, like really early in the year, this year, just out of frustration. Like that's usually how these reports starts. Because I get frustrated with the despondency, even among Bitcoiners, or apathy, and a lot of the fear, uncertainty, doubt stories that start to pop up. It's like, oh, well, Bitcoin it's going to go a lot lower because scenario X, Y, Z is surely going to happen. And so that's what I started doing, is really evaluating those scenarios one by one. It's like, all right, let's say, the scenario of Bitcoin miners selling a lot more Bitcoin. Like, is that realistic? How many coins do you actually have? Or, what if another Bitcoin exchange goes bankrupt? What happens then with the price? Or, what about the scenario where Satoshi all of a sudden comes out of the woodwork and he tries to sell his 1 million Bitcoin that he supposedly, anyway. So I just go over a bunch of those scenarios. And a big one, or one of the biggest one, is government crackdowns. Because I do think Bitcoin clearly has entered the political arena very clearly. Like there's Bitcoin candidates, but then I think we'll also see backlash, and we'll see Bitcoin being this, called out as the scapegoat, or used as a scapegoat, even for inflation. I can see that, where Bitcoin goes up a lot and then it's blamed. Or, I mean, we already saw that Bitcoin is blamed as supposedly contributing to global warming and things like that. So I go over that in the report, all those scenarios, and just evaluating them one by one. And then of course there's some significant tailwinds that I also talk about. And eventually I go into, okay, well, say that you want to buy some Bitcoin. Like how can you think about it? So like, do you dollar cost average, or do you, buy a lump sum? So there's like different approaches. And then also, as far as how much to allocate in your portfolio, how can we think about these things? Because I do believe that everybody's different, and even just by demographics, right? If you're 25 years old and you're just at the beginning of your earning years versus if you're 65, like you're going to have a completely different, set of desires. Like, what do you want your portfolio to do for you? So in that context, I talk about Bitcoin as looking at it as an insurance of the rest of your portfolio, which is the more conservative approach, just a 2 to 5% of your assets, convert those into Bitcoin. And then if the bond part of your portfolio goes up in flames because of that credit event we're talking about, or if the real estate starts to, maybe even if it's just flat, but the dollar inflation is 20, 30, 40%, well, then, part of your portfolio starts to be on fire. And that's where I think Bitcoin will really outperform and kind of save the day. So that's one way. And then there's a few other, more aggressive strategies that I think people can consider when and looking to invest in Bitcoin. And then the final part of the report is where I go into more practically. It's like, okay, well, I'm ready to buy Bitcoin. Now, how do I store it? Because that's a really big question. And I think the importance of that question has been made clear with the default of FTX and several other like earning schemes in the Bitcoin space. It's clearly very important to think about how to store your Bitcoin. And that's where I end up suggesting thinking about using collaborative custody, which is a way to use multiple signatures to store your Bitcoin, and you control one or multiple, and then you allow one or two corporations to control like one or two keys for you, so that you have a great mix of, managing your own keys, like never giving ultimate control to any outside party, like not having that third party risk, but at the same time, also having some support, because still today, by far, the biggest reason why people lose Bitcoin is just they forget their password, they lose their keys, just pure loss events. And so that's where this collaborative custody is, in my view, for the vast majority of people, it's a great middle ground solution.
Let's talk about other macro factors to consider when it comes to thinking about Bitcoin. I mean, look, I think if you're a long-term investor, then the idea of dollar cost averaging makes the most sense, right? It's just like every other type of investment from that standpoint. But for those that want to try to time it tactically, what are some of the things that you observe that might make for potential reasons to enter, right? So,
yeah, I mean, if you want to try and time it, look, for sure, if you do a lump sum investment, there's no reason to choose one or the other. You can combine as well. You can have some part as in lump sum and then dollar cost average as time goes by. But if you do the lump sum approach, your results tend to be more volatile. And unless you manage to really, choose the top when everybody's losing their minds, you will likely outperform a dollar cost averaging approach, just based on what we've seen the past 12 years. And as far as timing the market goes, one very simple way to look at things is just how far are we down from the previous all-time high. I think right now we're still down like 65%, because remember, we come from $65,000 Bitcoin, right? And now we're down at, I believe, 25,000. So that's a really significant downdraft. If you look at simple things like Google Trends, you see that global interest in Bitcoin is still down like 70% compared to, when the top was around. So I think that over the long term, if we look back 5 years from now, 10 years from now, it'll be very clear that this is a period where Bitcoin was significantly undervalued. And then additionally, and that's something I do in the report as well, you can look at some of the ways that Bitcoin holders have been behaving. Because I don't know how familiar your audience is with the mechanics of Bitcoin, but basically, one of the ways that Bitcoin stays or enforces its scarcity is by maintaining a ledger. It keeps track of every transaction settlement that ever happens in Bitcoin in what's called the Bitcoin blockchain. And so you have that ledger. So you see the Bitcoins moving around. Like, of course, you don't know who sends it to whom. And sometimes it can be a self-dealing transaction. Sometimes there'll be someone who's just reshuffling their own coins. But even then, I believe that it's significant because that, when you have Bitcoin in cold storage, it takes effort to get to your Bitcoin and to start, the process of moving them around. there is some security risk involved in doing that. And so, even having the option to sell your Bitcoin at that time, I think that's significant where you touch your own Bitcoin. But the vast majority of those, movements on the blockchain are going to be Bitcoin changing owners. And so it's super interesting because you can basically organize your knowledge of the blockchain by how old the Bitcoin are. Like some Bitcoins are going to be very old. Some of them are 5 years old, 7 years old. And then other Bitcoin balances are going to be 1 year old or 2 months old or, 2 weeks old. And so you can basically start analyzing what are the whales doing. That's one of the things that you can really find out by doing blockchain analysis. People that hold thousands of Bitcoin, hundreds of Bitcoin, sometimes balances of over 100,000 Bitcoin, how are those whales thinking? And just you try and come at that, you come up with hypotheses based on their action because you can literally see what they're doing. And so one of the things that we see consistently is when Bitcoin is, with the benefit of hindsight, truly overvalued, when there is exuberance, when the price is at a place where 6 months or 12 months later is 50% lower, when there is exuberance, Bitcoin whales will actually sell Bitcoin. You see the old coins just coming in and boom, like moving around and being, that's my belief, being sold. And so that's a really valuable metric, right? So, cause then you can look at what whales are doing today and wondering like, well, are they selling? Are they holding? Like, what are they doing? And very clearly, whales have been not selling into these recent rallies. Like we've actually gone up 100% since the bottom, right? And you can very clearly see that whales are just unfazed. They're holding. They don't think Bitcoin is overvalued at all. So that's one way to look at Bitcoin that I think is valuable because it's actually, like, if you could imagine if you could do that with gold or with, any other asset, that would be tremendously valuable. And so we have the luxury that even though it's anonymized, we have access to that data in the Bitcoin space.
There's a lot of people that say there's Bitcoin and there's everything else, which may be true, but is there anything that from your vantage point is, somewhat of a competitor?
Well, I mean, for years, like since it first was talked about in 2014, and then eventually it was launched, I believe, in 2015, I've been following Ethereum because to me, that always was kind of a competitor in the sense that it tried to claim the intellectual space that Bitcoin was claiming. That some of the promises of Bitcoin, like smart contract, asset issuance, all those kind of things, Ethereum was saying like, we can do that and we'll do it better. And they were also saying like, Bitcoin is slow. Like, look at how slow these transactions are. We can make faster transactions. So it's trying to, in a way, like run Bitcoin. I was trying to, catch its, snatch away its glory and say like, no, we are the actual. And of course, there was a lot of, oh no, which, that's what you want to do when you're an attacker is you want to present yourself as innocent and no, we're just trying to be friends. And, we're going to all be one big ecosystem. But to me, as became clear later when they started pushing this narrative, like, oh, we are ultrasound money. Like they've always been trying to not complement Bitcoin, but try to like overtake the narrative. And so that and because also, for example, the decentralized narrative, like at least the Ripple has made little claims to being actually decentralized. They've really been cozying up to governments. Like they kind of want to become the issuer of central bank digital currencies. They always promote how transparent they are and how easy it is to monitor everything. Whereas Ethereum, like they pretended to have the same cypherpunk roots of like, oh, well, it's going to be a new world and people can do things privately. And even the word DeFi, like decentralized finance, like that is what's being built on top of Ethereum. So yeah, that's been the main one that I've been studying over the years. And, I think it's clear that it's just becoming ever more centralized. They've done so many hard forks by now. A hard fork is where you change the software in such a way that it becomes no longer compatible with previous versions. So imagine it, back in the day, or maybe still today, like you upgrade your Windows computer and you notice that, certain file types or certain things cannot be used on an older version anymore. So it's not reverse compatible. So that's what Ethereum has done many times over the years, and they keep doing, is making these hard forks. Whereas Bitcoin has always done soft forks, like forks that do change the code, but in a way that old stuff can always still be, the old functionalities all still work. It's just you're adding new features. And so because of these hard forks, you basically are needing to follow a very small amount of people who become the de facto leaders of Ethereum to make sure that you keep on following whatever software upgrade they propose or whatever change they propose. So they become the de facto czars of the whole network. And anyway, I could go on and on about it. But so to me, that's the one to watch in terms of market cap or versus Bitcoin, or the price, the Ethereum Bitcoin pair, for example. If you want to look at it from like a trading point of view, look at that chart. So by now we have about 7 years of data there, and try to find out the support and resistance levels. And I believe it's going to break down. I think Ethereum is going to lose against Bitcoin. And I think it's kind of the symbolical leader for almost all the altcoins, for almost all the alternative cryptocurrencies that are out there. Most of them are predicated on the Ethereum story gaining the upper hand, and that idea of like, we say that we're decentralized, but we're not really, that people are going to keep believing that. So I think, once the Ethereum bubble bursts, a lot else is going to follow. And that's why in the report as well, I talk about the impending decoupling of Bitcoin with the crypto space. Yeah, those are just some thoughts.
Again, we agree on Bitcoin will diverge just from that alone. All right, so we got an election year next year, and you've seen some rumblings from Robert Kennedy and Vivek and others talking about Bitcoin. I'd be surprised if any mainstream candidates make it as part of the platform, but any thoughts on sort of how Bitcoin could maybe turn into a political issue next year?
Yeah, I think it already is. I mean, if you just look at it from an adoption point of view, I'd have to look at like the latest surveys. And it's a little bit frustrating if you try to find out about Bitcoin adoption, because all the surveys tend to ask about crypto, right? And so if you have some kind of, I don't know, some shitcoin like Solana or something, and you get a survey like that, you're going to be like, yes, I own crypto. But to me, that's not the same. I would want to know is how many people actually own Bitcoin, because I think that's the election issue. That's what, Bukele ran on in El Salvador. He became the Bitcoin president, not the crypto president. But even without that data, I think it's probably safe to say we're at least 10% adoption among voting adults, if not more. And so gradually, Bitcoin, especially for people who have significant amount of savings, it could become a single issue. They could become single issue voters where they don't care if the candidate is Democrat or Republican or independent. Like, they just want to vote for the Bitcoin guy. So even if Trump would run on a Bitcoin platform, like, maybe they would vote for him. So I think that's why, politicians are catching wind of that, and they realize like, oh, this is actually a parade that is going on. And maybe if I wave a flag in front of it, opportunistically or not, maybe they actually believe in it. I can really rally these votes. So yeah, I mean, I think that you're right. The existing powers that be are very much enmeshed with the fiat system, with Wall Street, with their their traditional donors, etc. So they're very unlikely to be friendly to Bitcoin. Like, I think it's more likely that they would be neutral to negative on Bitcoin. And especially if there's inflation, we could even see kind of a crackdown on Bitcoin where, again, it's a scapegoat. And we do have the precedent of 1931, I believe, the act that cracked down on possession of physical gold. So, it's something to look out for. I think basically, to me, the main thesis that I have is like, Bitcoin is going to be extremely polarizing. Like, it's going to become an issue and you won't be able to be neutral on it. Like, either you'll be like, I'm a Bitcoin guy, I'm all in favor of it, or you'll be like, Bitcoin is the devil And so we'll see certain elections swaying one way, and they'll try to abolish it, which is impossible, and censor it, which is going to end up badly. And then we'll see other countries that embrace it and have very friendly legislation. And of course, money can vote with their feet. So I think money is going to flow to those places that are friendly to Bitcoin. Like, I think Latin America is going to be an interesting example in that sense. A lot of those countries are fed up with being part of the dollar system, or at least they want more options. In Africa, we see similar things. And then the US is a bit of a toss-up so far. I think that because of the constitutional rights, the right to property, especially, people always say like Bitcoin is free speech, but I don't really think that is the one that's going to hold the most weight. I think it's more like the right to property that's going to, make the difference. And then gradually, increasingly, we're seeing states, the individual states having more political weight as compared to the federal government. I think those are going to be the deciding factors on, where the penny is going to drop as far as Bitcoin goes.
Tuur, for those who want to track more of your thoughts and analysis and work, where would you point them to?
Oh, I would say, just Google my name and you'll find my Twitter account. I think it's also linked there. And then if you go to adamantresearch.com, is my research firm. Adamantresearch.com has direct links to all my reports, like my historical reports of the past years. And then there's also a link to our latest report, which is how to position for the Bitcoin boom. It's 20 pages. It's very dense, but I wrote it specifically with the lay audience in mind. Like, this is the stuff that literally I sent to my family and friends. So it's meant to be valuable for both investment professionals and the people who just invest for their own funds.
Everybody, again, please make sure you follow Tuur. I've got 2 more spaces back to back, so I'm going to wrap this one up a little bit early just to prep. But please give a follow to Tuur. Hopefully, I'll see you all on the next 2 that are coming up. And Tuur, I appreciate your time.
Thanks, Michael. Great questions. Enjoyed being here.
Thank you, everybody. Cheers.
Cheers.